So we've seen a pretty dramatic market shift when we entered or changed the calendar from July to August. What has changed to cause this shift in sentiment? Why are investors all of a sudden getting nervous and are selling into this market versus buying the buying that they've been doing for the first 7 months of the year? What has changed? I guess the quick answer is nothing. Nothing has changed. We actually just went through an earnings season where our corporations report their latest quarterly earnings, and more than 80% of US companies that reported earnings recently beat expectations. Things looked fantastic. Stock market was trading at a high we hadn't seen in quite some time. So why the shift for the month of August? Well, the only thing that I can point to that has caused individual investors to become a little bit shy, a little bit nervous at this point, are treasury yields, basically US bond rates. That is the only thing that has had a major shift. And we have a chart of the US Treasury yield right now. It is basically the 10-year Treasury yield. We can put that up. And you can clearly see how the 10-year US bond rate has moved significantly above 4%. In fact, this is the highest the 10-year government bond rate has been at really in about 22, 23 years. The last time we saw bond rates, the 10-year at this level, was back 2006, 2007. So you can clearly see here how much just in the last few months bonds have moved higher. And as we know, when bond yields move higher, those interest sensitive parts of the market don't like that. Banks have turned down because of it. Tech stocks even pulled back recently because of it. So really, it's been this bond yield, or the 10-year, and even the 2-year has gone towards 5% recently, that has started to spook investors. So here you have the 10-year. If we were to look at a couple of other charts, we can go to the S&P 500. You can actually see that the S&P 500 is total opposite. As bond yields have moved higher starting in August, the S&P 500, the biggest index for North American stocks, has moved down. You can see it start at a high at the beginning of August, and towards the right-hand side of that chart or that graph, you can see it starting to move down. The NASDAQ, which has been the winner, the all-star over the first 7 months of 2023, if we pull up a chart on the NASDAQ, you will see the same thing. As bond yields continue to rise well above 4% on the 10-year, the NASDAQ has sold off as well. So what does this all mean? Should investors be nervous? Should you be selling your investments? Well, I always say, I'm not about to sell my good quality companies just because bond yields are higher. Should I sell my shares of AMD, Microsoft, or Apple just because bond yields are higher? I don't think so. As long as fundamentals at these companies are strong, the fundamentals are strong, their businesses are strong, they're growing on the top line, the bottom line is growing. To me, that is most important. Yields are going to go up and they're going to go down. But overall, I believe that over time, the good quality companies will rise to the top. And I'm not concerned about higher yields, at least for now. Obviously, if yields start to get significantly higher, perhaps, well above 5%, then maybe we will have to have a different conversation. But in and around 4%, 4.5%, even if it starts to approach 5%, yes, we're on the high end of things, but by no means, in my opinion, would this be a message for us to panic, for investors to panic and sell their good quality names. So going forward, let's keep an eye on these US treasuries, on these US government bonds, and let's just keep an eye to make sure that if things do get much higher, then we may have to make some changes going forward. But until then, I believe you continue to hold your good quality investments and even add to them if things should pull back because of these higher yields.